Welcome to iQuanti's Emerging Performance and Acquisition Marketing Trends with a particular focus on banking and financial services. Uh, this is a quarterly report that we release. And because we work with a lot of financial services firms, there are certainly some insights that we glean that we share every quarter. But let's start with the overall platforms and kind of what's happening there. As you can imagine, there has been a sharp slowdown in advertising revenues, especially I think as companies grew more cautious. And so the growth rate has kind of dramatically dropped, especially in social media, I think, where again, the contribution overall or the things tends to be more brand driven and therefore more discretionary. Search kind of continued to grow, but much slower as well. So from 62%, they were down to like 13% on search. But both like Facebook and Twitter actually kind of were negative growths as compared to kind of, last year. And YouTube just grew at a 5% number. So broadly, I think search held on its own. The other big exception has been LinkedIn. Again, with the Great Resignation, obviously LinkedIn kind of does very well because a lot of the revenue comes from like job searches and job seekers, and that's essentially where and recruiters, and that's essentially kind of obviously drove a strong growth for them. So they actually grew very, very well. On the search side, again, the growth has been driven by two main factors, as one could imagine. One is retail. So as pandemic has ended, so there's a huge growth, almost 8x in terms of open near me. So terms that are about open near me. So that's been a big, big jump. Again, similarly, as compared to last summer, double the number of people are searching for like vacation ideas for summer and terms like that. So again, those have been travel and retail have been big drivers of growth on the kind of search side of things. As we look at deeper into social platforms, I think a big impact on social that we've been seeing is the big story of TikTok. So TikTok continues to expand dramatically and kind of outpacing everyone else in many sites. First, of course, you see the chart and you see the growth rate. So they're growing tremendously and they're expected to kind of catch up with YouTube in overall advertising revenues by 2024. So very solid growth there. Also, when you look at the amount of usage TikTok has in terms of like average minutes per user, they're like sky high. They're at 96 minutes. Compared to them, I think YouTube is around like 74 minutes. And then Facebook is much lower at like close to 49 minutes. So you see a big difference both in terms of how fast they're growing as well as the usage. So that's, again, a big threat to anyone who's kind of, obviously in this platform. And I think certainly Meta and YouTube with its Reels and Meta, both are trying to kind of catch up. But again, it's been very, very difficult. I think certainly TikTok has something going, and that has been really helpful for them. On the search side of things, kind of Google continues to focus on just improving the quality of search, both for users primarily as well as advertisers. So with AI ML kind of driven search, they've been really focused on what they call multi-search, which is really figuring out what is the best outcomes to show you. And can you even search by pictures? Can you search by other ways? So both in terms of output as well as input, kind of really driving better search experiences. This has a huge impact on marketers. It means that to communicate our messages, we just don't need to generate like one flat page of web page after other. We can really figure out what is the best way to communicate to about a specific thing to customer. And, it could be a video, or it could be, it could be an image. And we could do whatever. And obviously, Google is kind of looking at the technology to kind of give the best outcome to the users. So that's, again, very, very useful and something that we as marketers now need to keep an eye on as we are thinking about what's the best way to communicate with the content, So that's one. On the paid side of things, they try to continue to grow Performance Max. Performance Max is essentially basically taking money and using AI/ML technologies to really figure out what is the best way to invest this money across all the platforms, right? And investing it so that you eventually maximize your overall performance. So it obviously the model needs to learn, so it takes time. So we advise, we advise our clients to obviously take their time but eventually they are kind of showing progress, and this is something that will next level of automation that absolutely can kind of continue. I think the other piece, of course, which has been really, we've been thinking a lot about, has been third-party cookies. And the phasing out of third-party cookies is kind of now being delayed. I think getting to an industry standard has really been a struggle in some ways. So I think it's kind of now been delayed. But I think broadly the focus is on like testing and refining the new privacy sandbox technologies that kind of Google kind of has rolled out. So that at least gives us more time to kind of prepare for the third-party cookie deprecation. And of course, there are new privacy sandbox kind of solutions to be tested. So that's what's going on in the overall platform side. Big rise of TikTok, search kind of still holding on its own primarily. And of course, LinkedIn kind of continues to climb. The one piece of news which I didn't mention, which is useful from a LinkedIn perspective, is that LinkedIn is on Bing, you can now overlay LinkedIn segments, which means if you're a B2B marketer, there is a great benefit to kind of, eventually target businesses because LinkedIn has good segments there. So I think that's one thing to kind of remember in platforms. Now, as we move towards banking and financial services, I think it's interesting, right? There's been, obviously, businesses are worried about a recession and they're kind of controlling advertising spend, and we are seeing that. But consumers seem to be completely oblivious. So spending has really been strong, of course, driven by travel and driven by retail. But again, very strong spend. People are kind of, behaviors kind of continue to be very, very strong. And it's just been very, very interesting to kind of see what's going on. So one, of course, in credit cards, again, all the large issuers saw very strong year-on-year increase in kind of spending rates, so 11 to 18% growth. The very strong demand overall. So all of them acquired a record, or many of them acquired a record number of accounts. And then pay down rates also continue to be elevated. So yes, people are gradually building balances, and so that buildup of balance is happening, but pay down rates continue to be much more elevated than it was pre-pandemic. So to that extent, the credit card economics kind of are still struggling for banks. But again, I think people are acquiring a lot of credit cards at this point. As we look at deposits, again, very healthy growth in deposits, higher than pre-pandemic levels. Now, some segments are showing weakness, and this may be the early signs that we will see. But right now, again, seem very, very strong. As we look at other forms of lending, right, auto loans have really struggled, primarily driven by supply, because auto supply has been really, really patchy, and that's kind of hit them. Also competition, again, as interest rates rise, what exactly do you do there? And I think that's, again, some players have opted not to kind of raise rates, and that, which is fine, great for consumers, but then other people have kind of stepped away from the market. On the mortgage side, obviously, refinance has really been tough, very, very high rates as compared to a year back. So I think that has been kind of struck. And even with new houses, you can see that the prices are sky high. The housing market is really up. The interest rates are high, which means obviously you see some kind of softening of demand. So that there is some strength, there is some issues there. Both personal loans and commercial loans are seeing kind of strong growth and kind of high loan balances. So broadly, a good picture as you kind of look at this stuff. Mortgages and auto loans are like what one would expect at this point. So broadly, I think those are some of the key trends that you kind of you'd see. That concludes the iQuanti quarterly second quarter update. As we, again, I would urge you to kind of quickly download stuff. There's a lot of great data in there, some good charts, and feel free to reach out if you guys want kind of more data, any more insights, and look forward to, again, kind of sharing this with you next quarter with insights as the market continues to evolve.